Hello, everyone. Thank you so much for joining us today online for the AVPN webinar on investing in technology to enhance impact in a post-COVID world. I'm Komal Sahu, Chief of Sustainable Finance at AVPN. It's great to have you all with us today. For those of you who do not know us, AVPN is a network of funders and resource providers with over 600 members across 32 markets. Our mandate is to move more capital towards impact in Asia for providing social investors like yourselves opportunities to connect, learn, and lead. AVPN is an industry platform to connect and share best practices, experiences, and knowledge within the network for the development of an impactful social investment community. As part of AVPN members sharing their work and experience in mobilizing capital for impact, this session will include the information about AVPN members' investee organizations, funds, and products. Information shared by the speakers in this session is provided by third parties and does not represent the views of AVPN on any matter. AVPN does not warrant the accuracy, completeness, or usefulness of this information and is not liable or responsible for reliance anyone may place on such information. Participants should consume this information at their own risk. AVPN reserves the right to edit, cut down, and adapt the content and materials to align with the stated agenda or purpose of this session. Any information or materials provided are for information and knowledge sharing only and do not in any way constitute tax, legal, financial, or investment advice, nor do they constitute offers, solicitations, or recommendations for any investment activity. I'd like to highlight a few features to make this a productive and engaging session. Please note that this session will be recorded and you will be able to access the recording on the AVPN website. We will have time for Q&A, so do stay with us till the end of the session. Feel free to type up your questions in the Q&A box and we will convey these questions to our speakers. You can also upvote any questions posted by the others if you want a particular question to be answered. Upvoted questions will have a higher chance of being picked up by the speakers. Due to time constraints, the speakers are not going to be able to address to all your questions. Rest assured, we're monitoring this behind the scenes and we'll try and address as many as possible. We have a few polls for you to participate during the webinar. Please make sure you scroll down to the bottom to ensure that you have answered all of the questions. We encourage you to participate in the polls as we're interested in hearing the voice of the audience. If you could please launch our first poll. To get us started, I would like the audience to fill out the poll in the window so that we can be sure about who is in the room. Today's webinar is the third edition of the Impact Fund webinar series, an offering of AVPN's Family Office community. Our next Family Office event is with the Impact Measurement Project as they share about their recent work integrating financial and impact management methodologies through the Impact Frontiers collaboration and their recently published investor handbook. We will be sending out an invite to our Family Office members for this event, which will be held on the 2nd of October. I see a number of you have filled out this poll. We have 30 seconds more. So if you could please go ahead and fill out the poll and then we can close the submissions. Jenny, if we could please close the poll. It looks like we have a number of foundations, impact funds, and private equity and venture capital in the room. That's wonderful. And we have a lot of people whose focus is Southeast Asia. So that's also wonderful because you'll be hearing from our two funds that are very Southeast Asia focused. It's an honor to have you all join us today. To kick off this discussion, I have the pleasure of introducing and welcoming our webinar's moderator, Jacqueline Xiao. Jacqueline is head of ESG and impact at Open Space Ventures, where she leads the firm's approach towards responsible investing from deal sourcing to exit and works with the portfolio companies to drive sustainable growth. And with that, I would like to pass the mic off to you, Jacqueline.
Kamal, and hi everyone. Very glad to have you here with us today. And like Kamal said, Very happy to see, lots of people from the PE/VC space who are interested in Southeast Asia, because that's exactly the crowd that we were going for. So good marketing there by AVPN. So I'd like to kick this session off with a very quick overview on ESG and impact. So interest in the topic of sustainable investing or responsible investing has definitely grown over the years, with about $31 trillion USD in professionally managed assets in 2018 falling in this category. And the ongoing COVID pandemic has certainly also thrown this, into much sharper focus. And I think the numbers in this slide speak for themselves, so I don't want to go into too much detail here, but I did want to note two things. First is that Southeast Asia seems to lag the rest of the world in this space. Our estimate is that despite the fact that Southeast Asia accounts for almost 10% of the world's population, as well as GDP, sustainable PE deals in Southeast Asia only accounted for 6.5 billion out of the $31 trillion global pot, which is, it's really not commensurate with the amount of impact we could be having here. The second observation is that while 96% or almost all investors in Southeast Asia say that they have accelerated efforts to incorporate ESG, only 14% are actually doing so. So it would appear that we are only just beginning to understand and to implement tangible ways in which ESG and impact thinking can create value for businesses and investors alike. And there really is a massive opportunity ahead of us to put our capital to work. So I'll leave you with that thought as I move to introduce our panelists for this session. So first of all, a very warm welcome to Shane. Hi, Shane.
Good afternoon, everyone.
So Shane Chesson is founder and partner of OpenSpace Ventures, a Singapore headquartered VC focused on investments in Southeast Asia-based technology companies. OpenSpace currently manages 3 funds with a total committed capital of over 300 million USD. OpenSpace portfolio companies have raised more than 6.5 billion USD in follow-on capital. Shane was previously managing director and co-head technology investment banking of Citigroup Asia Pac and has an MBA with distinction from INSEAD. He was also a finalist for the AVCJ PE and VC Professional of the Year in 2018. Shane also chairs the investment committee for iHub Business Accelerator, which provides entrepreneurship opportunities for foreign domestic workers. I also want to introduce Virginia Tan. Hi, Virginia.
Good afternoon, everybody.
Virginia is the founding partner of Tasia Ventures, the first gender lens VC fund for emerging Asia. She also founded She Loves Tech, the world's largest startup competition for women in technology. Virginia is also the founder and former president of Lean In China, one of China's leading nonprofit platforms for women with over 100,000 members. Virginia's background is in law and finance, specializing in emerging market investments, and she has covered more than 30 billion USD of transactions over the course of her career, whilst at Allen & Overy, Clifford Chance, and the Royal Bank of Scotland. Let me now pass the time over to Shane for him to round out his introduction and to share OpenSpace's approach towards tech, ESG, and impact.
Thanks, Jacqueline, and thanks again to AVPN for the opportunity to speak today. So OpenSpace Ventures, as Jacqueline mentioned, operates 3 funds focused on Southeast Asian venture. We've been operating since 2014, and our investor base, which is now around about 350 million, includes sovereign wealth funds, institutional investors from all over the world, some foundations and endowments from different universities. So it's a very institutional investor base. We focus on Series A and Series B investing across Southeast Asia, and we focus on a range of different subsectors and a range of different geographies. Our Fund 1 is tracking top 5% VC funds globally, and our Fund 2 is on track to achieve a similar track record. So that's the introduction I would give to a regular investor, right? You can see from my background that Jacqueline gave, I'm the quintessential ex-banker VC, right? Worked for years at Citigroup. Before that, I was at Merrill Lynch and Bain & Company. When Hien and I founded OpenSpace in 2014, our focus was on raising the money and investing in whatever it took to get more money raised, right? We didn't come in with an impact lens. We didn't come in knowing too much about this space. But what we did know is that Southeast Asia was a fascinating market. It was big, and there was some entrepreneurs who were starting to pick up steam, and there was a lack of VCs who were willing to put in the effort to actually like build great businesses in this region. And so in 2014, when we got Fund One up and running, we had to go around hand in hat to a lot of our networks. We got thrown out of a lot of investor conferences, but we managed to convince just enough people to back us and to start putting money to work. And later on, you'll see our portfolio. In those early days in Fund One, we were just seeing what might possibly achieve the scale to be able to generate VC style returns. We did software that sold into the US. We did hardware companies. We started to look at insurance for developed markets like Singapore and North Asia. But then we also put a few investments to work in the emerging parts of Southeast Asia, even though people felt it was too early and people felt it was too fragmented and the populace wasn't yet ready to engage with a local style of mobile app or mobile service. And so for those of you who have been part of this journey, I think you agree it's been an amazing path. You know, we've gone from being on the periphery of the investment world to being one of the most interesting sectors. And we'll talk later about how COVID has reinforced some of these trends. And I think that's also driven an evolution of the way we think at OpenSpace. And I just want to take you through just a couple of introductory comments about that journey. So I think as we went through and we started to raise more money and invest in more companies and we saw the success we were having, we noticed some of the biggest success that we had was in companies that were solving some of the biggest problems in Southeast Asia. Where can you deliver transport where no one has transport? Where can you empower SMEs who aren't empowered? How can you deliver healthcare services remotely? How can you empower marginalized groups, such as the farmers in this picture behind me? Is there a way in which you can, back these sorts of categories and generate outstanding returns? We look back at our profile probably 3 or 4 years into our journey and said that actually some of our best investments were of those characteristics. However, I also asked around, I asked any of my team members, are any of you guys willing to do the work associated with us being better at ESG and better at impact and asking the appropriate questions? And there was sort of lukewarm interest. We have a lot of different personality types, but no one was really ready to pick up the baton and really charge hard. So the next step for us was to start putting things into some sort of structure, some sort of organization, and to invest in them. And so Jacqueline, who you just heard from from the introduction, she joined us, I guess it's about 12 months ago. She's helping us to get much more organized, helping our team to make sure we're using the right frameworks, nudging all the parts of the investment lifecycle from the initial screening through to the IC preparation, through to investment management and exit. Always considering what are the ways in which we can nudge our companies, nudge ourselves towards producing better impact, measuring, monitoring, and reporting back to our LPs. And I think this has really been a great journey for us. It's backed strongly by the founders, and it's been built into the way in which we think about our brand and our team. We still have a lot to learn, but we're very happy to be on this journey together with many of you guys out there and together with AVPN. Thanks.
Thanks. Thank you very much, Shane. Virginia, now over to you to tell us a little bit more about Tasia Ventures and about gender lens investing.
Sure. Hi, everybody. Delighted to be here. Thank you to AVPN again for organizing this. Tasia Ventures is Asia's first gender lens VC fund. So I did not have traditional sort of VC sort of background, and the story is pretty unique. What essentially happened was I moved to China in 2013 after 10 years in Europe in the Middle East, and I was working on the Belt and Road and strategic investments. And what essentially happened was the greatest accident of my life. We started to build communities for women like on the weekends. It was essentially a sort of a extracurricular thing. But 2013 was also the rise of, you can say, a new wave of tech, or the rise of big tech actually in China. And what essentially we had was in less than 3 years, we had a community of more than 100,000 women across China. And how do we manage them? We manage them through groups like WeChat. So through the last couple of years while I was in China, we basically had a front seat as to how women consumers were actually essentially leveraging upon technology, not just to communicate, but seeing the way that affected the way they lived, they worked, and consumed. As part of the nonprofit organization we ended up building, which had more than 100,000 members across these cities, one of the initiatives that we have took off across the world in a big way, again showing us the potential of what people were building by women for women. This competition called She Loves Tech, when we started in 2015, again, a volunteer job, by a group of people, in a room full of 100 people, is now in 30 countries across the world. And every year we look at more than 3,000 startups in a period of 6 months. So that's actually how Tasia Ventures was born, because I started to look at what I call the she economy as an opportunity, and I couldn't really understand why people were not looking at it more. That why weren't people actually seeing what we were seeing? So if you think about it, I think Shane talked a lot about how he did not start with an impact lens. It was really interesting when I first started building Tasia about 2 years ago.
I'm just gonna jump in a little bit. Virginia, I think your audio is breaking.
Is this better now?
Yeah, that's clear. Thank you.
Perfect. Yeah. When we started Tasia, 2 years ago, I think the automatic assumption from everybody who met us was that, okay, so it's a gender lens fund, therefore it must only be about impact. I think people were very, unwilling to look at women as actually economic drivers or actually just an opportunity. But what I was seeing in China transformed before my eyes, and the rise of many unicorns like Red, like VIPKit, all worth several $billion now, was how women were not only first adopters of new consumption behavior, but often conduits to new markets and drivers of revenue. And actually, what I find really exciting now that I've come back to Southeast Asia after many years away is that what we see on the right side, for example, is the explosion of the Southeast Asian internet economy, looking to triple, to 150 billion by 2025. The most mobile, engaged sort of mobile users in the world. On the left side, this is the way Tasia Ventures actually looks at women. We see women as market makers. We see them as consumers. As consumers, multiple markets in one. As online traffic, they are more active online than men. They buy more than men online. They interact more brands online. They interact more with each other online. And we see them actually as, in many ways, a huge asset for a mobile workforce, especially as work now moves towards more flexible and contingent work. And this was the opportunity that we felt people weren't seeing. Next slide, please. The rise of the internet economy has been, caused by a huge number of factors. But what we've seen, is new business models such as like new retail. The rise of content. Content is king in an internet economy. And the increase in digitalization of services, and obviously the accompanying explosion of payments. And what we see as a she economy is actually, in Asia worth $8 trillion, larger, essentially largest economy in the world. But I think what people always saw women as, was as beneficiaries and never just as drivers. What we noticed essentially was that women were driving revenue and growth in companies in the internet space, regardless of whether they're female oriented or not, in a variety of categories. And therefore, we started to look and invest in technology-driven companies which leveraged upon women as a demographic, as consumers, as online traffic, and as a mobile workforce. We also noticed that digitalization and internet economy were not only enabling women to actually scale these behaviors, but also increasingly to monetize these behaviors. So they were both buyers and sellers. They were both influencers and creators. It's an opportunity that we're actually seeing now take off across Southeast Asia after what we've seen in China. Next slide, please. What we essentially started doing back when we launched the fund back in 2018, we invest in seed and pre-A companies. What our team of partners enjoys doing essentially is working with founders and have the ability to actually apply technology and our she economy expertise and networks to help founders with that product market fit and positioning, as well as strategic resources. Obviously, we had not known that COVID would come back in 2018, but by focusing on the core needs revolving around the life cycle of women and the technology and distribution infrastructure around that, this has led actually innovative, sort of unexpectedly, to the construction of a countercyclical portfolio. And what we're essentially doing as a fund is actually building a portfolio of synergistic distribution networks for goods, services, content, and data, all targeted at women consumers, increasing cross-selling and partnership opportunities. And we're already starting to see that happen. Next slide, please.
Virginia, sorry, just jumping in real quick. Your audio is still breaking a little, so you might want to try, I don't know, taking off headphones or speaking a little closer to the mic. I just want to make sure everyone can hear you.
Sure. Is this a little better, Jack?
I think it's better at the start and then it kind of fades off. So maybe let's just give this a shot.
Sure. Okay. These are just some of the key trends for the she economy that we've been focusing on, but I'll share more with that together with Shane later on. Next slide, please. And I think in essence, I mean, I told our story, and I think, you know, a huge personal motivation for me as I build the fund is that I think people see women, I think the white elephant in the room every time I enter a room, at least in the early days. Now I think it's people are much more open, and I also see that as you know, I think of how the world is actually changing post-COVID is that they were always first to jump to the conclusion that actually by focusing on women, you're always limiting yourself. But we saw that as an opportunity, and we built a whole fund to essentially prove that. Alongside with some, I think, world's biggest gender lens sort of sourcing channels, which are proprietary. Next slide, please. And essentially a team, you know, from both China as well as Southeast Asia to really leverage on that. Right now, we have 10 portfolio companies across Southeast Asia with some strategic exposure to China and India. Across a variety of verticals. I think we will touch a little more later on terms of the, you know, the impact that sort of each sort of company, you know, has. I think, you know, when we started, I mean, we were pretty sort of commercially driven. You know, for us, it wasn't just the fact that, okay, you know, a company needed to have what we call a specific gender lens, which, you know, I will go into more detail later, but actually it was, you know, for us, it was key for us to have, you know, commercially scalable business models. And then on top of that, you know, what we really saw was, you know, that sort of gender lens sort of aspect was at the heart as opposed to the ancillary, you know, part of sort of the investment. But we can sort of, you know, emphasize that later.
Okay, thanks very much to both our panelists for these great introductions. I want to start our conversation now with a broad question around tech investing. You know, between OpenSpace and Tasia, we've got 40 investments over 13 countries. So I think we've got enough to make some comments on this here. And this is a very unusual year. So I think the answer matters more now than ever. And the question is this: what are some ongoing systemic shifts that create new or expanded investment opportunities into early stage tech startups? I mean, you know, clearly health, remote work, travel are the sectors that people have been talking about. But which shifts are short-term and which do we think will stick? And I think incidental to this, and in line with the topic of this webinar, how does applying an impact lens enable us to better pick winners, so to speak? Maybe I'll have Shane start with this one.
So one of the exciting opportunities investing in Southeast Asia, it's troublesome for the people, but it's an exciting thing for venture investors, is that there's typically very poor infrastructure in some very important areas. So when you talk about healthcare infrastructure, logistics to enable smooth supply chains, you talk about access to education, access to financial services. As you know, Jack, we were reviewing some numbers yesterday, and we know that 70% of ASEAN's population is still not properly banked, either unbanked or underbanked. So there's just, you know, this existing poor infrastructure, and technology has the ability in a fast, accelerated, environmentally friendly way to solve many of these infrastructural issues. And so we talk about leapfrogging existing infrastructure. Now, what COVID has done is it has accelerated these trends. People are realizing that there's a different way to do things. They are forced to change their habit, right? People do not want to go back to grubby, COVID-y cash. People don't want to go back to grubby, COVID-y hospital waiting rooms, right? They don't want to have to worry about their food and grocery supply chain anymore. So the fact that the venture community has funded and the entrepreneurs have driven incredible innovation during this period to deliver upon what people need in the new environment, I think are trends that are not going to get reversed. And I think people are going, you know, they're changing their habits. The other thing that's important is that they're developing new brand loyalties. So if your existing infrastructure provider was shut down or wasn't able to deliver or was constantly busy and couldn't address your concerns, but a tech company was actually able to step up and deliver upon that. And I want to give the example about Halodoc in Indonesia later on. New brand loyalties are created, which are going to be there for decades and, you know, for a long time. So I think that's some exciting trends that we're seeing, and I think I don't expect these to be reversed anytime soon. I want to talk a little bit about enterprise too, because I think Southeast Asia has often been about the consumer. Certainly for us and our 30 portfolio companies, 20 plus are consumer centric. However, the enterprise has also had to sharpen its game during this period. They've had to quickly adapt to new forms of online payment, integration with providers of logistics, smooth online or offline interface, right, to deliver upon this. And I think they've been underspending their budgets. They haven't been adopting the best of SaaS solutions. They haven't been, spending on technology generally. But now's the absolute imperative to do so. Otherwise, they're not going to survive. Therefore, there is a new wave of sort of B2B centric, including SaaS companies, that are going to rise during this period. And again, I think this is just an acceleration of a trend that would have happened otherwise, but would have, taken longer if COVID hadn't highlighted some of the opportunities. And to your second question, Jack, around how an impact lens, helps to focus the attention as a VC investor and as an LP potentially, and sort of where the opportunities are. There's still so much gaps that need to be solved. And I think that's always going to be an important way for you to think about the size of the opportunity. The classic first VC question, what's the size of the opportunity? And I would also say that Southeast Asia has this very interesting dynamic at the moment where the amount of those services that are delivered to the population is lacking. However, they are, adding wealth fairly fast. They're going to bounce back quickly economically. They're aspiring middle class. They're wanting to get out of the lower end of the pyramid and push themselves up and have a better quality of living. And yet that infrastructure is not there. So we've got an aspiring population that's getting wealthier fast and certainly moving into the middle class, but the infrastructure is not there. So I think that's definitely something that gives us the chance to invest in some great businesses. We can develop business models that monetize using people that can afford to pay, but can deliver great improved services to people at the bottom of the pyramid, thus engendering a much stronger reaction from our stakeholders. And I think that's something we want to try and power up. Certainly from Open Space's perspective, we are feeling that this is a great time to invest, and VCs need to help make these transitions happen by backing great entrepreneurs, having busy teams on the street, really like helping our companies navigate the new environment and make the most of opportunities. And for those of them that have been stuck in temporary or need to pivot, helping them through that as well. But certainly we have a great opportunity to have right here in Southeast Asia right now to power up the post-COVID world with great tech companies.
Absolutely, thanks, Shane. Virginia, did you want to respond to that as well?
Absolutely. Completely agree with Shane that, the trend towards digital transformation had already begun before COVID-19, but now, essentially, what was nice to have before is now becoming, essential. And I think, we all know that the rise of the internet economy was inevitable anyway, but I see what I see is actually the search, for sort of new business models. For the internet economy. I think, there are two post-COVID sort of trends that, I'm particularly excited about, and we are at the fund. I think one is what we see, the future of health and wellness, increasingly personalized, online or integrated, AI assisted. So for example, wellness, right? I think people talk about healthcare, but actually, we look at the whole sort of vertical, we call it health and wellness. Wellness, is, which is a $4.5 trillion market, actually is over 50% of total global healthcare expenditure. I mean, what we're actually seeing now is people are actually more willing to spend on wellness, and preventative healthcare than before. I think, touching on what Shane said about HaloDoc, we see the rise of what we call visual care and telemedicine. Globally now it's a $66 billion by 2021 sort of market. And I mean, I think, the sort of the strains of COVID has actually taken on, the financial sustainability, the delivery of care, access to services in the healthcare industry is actually taking us all question whether, there is actually a better way to do things. And what I see, what was sort of a niche, if not niche, but sort of not the norm before, remote consultations, monitoring, drug distributions, records might actually, likely to actually come the norm, or at least a sort of a physical sort of integration. We see 450 million people in Asia alone struggle with a mental or neurological disorder. And increasingly, looking towards the solutions, which are actually going to be affordable for people to actually treat or prevent that. The other I think the other, vertical which I'm excited about is what we call sort of the future of retail. So, for example, whether it's goods, services, or content or data, from a digital distribution perspective, or whether it's FMCG, content creation, people are pivoting to new distribution channels that connect them directly with consumers at lower cost. Because now, for a while, we were actually locked out of traditional retail sort of points, right? And I think, organizations, starting, with long-term sort of storefront infrastructure, are now having no choice but to refocus on omni-channel strategies so that they can be more responsible to dramatic shifts. I heard that from some of the biggest sort of property owners, sort of, in the field. But I think, I think these are driven by a few key shifts. I think, first of all, I think by 2025, even without COVID, 25% of Asia will be Gen Z with about 150 billion spending power. Almost 50% of Gen Z prefer direct-to-consumer brands compared to traditional retailers. 80% of consumers more likely to shop with personalized experiences, and 62% of consumers actually post-COVID are stating that social media, short videos, and messaging are actually their most preferred online channels for discovering new products and brands. I think, and I think that the third big trend, which I think is about time that we see, is I think COVID has shown us a whole group of what we call underserved consumers. If you think about the internet economy, who it's really serving, it's really 2 billion of the 7 or the 6 plus. So it's this group of consumers I call the next billion consumers, or I call it the next 4 billion consumers. By 2030, that group is going to be 5 billion people with a spend of about 55 trillion. Opportunities in second and third tier cities and rural areas. 2/3 of that spending will be on basic things like food, clothing, and housing. However, a lot of these products are going to be different from the ones that we, the first 2 billion, are actually going to be, that we're actually used to. And actually, the key to ensuring scalable access is technology, not just in terms of distribution, but also in payments. What I'm increasingly seeing across our portfolio as sort of entrenched sort of financial infrastructure. And I think, from us, we're a Gender Lens Fund. What's really interesting to us from a Gender Lens perspective is this, right? I think, we see this as general trends, but what I'm seeing increasingly, in some ways, I think COVID is unexpectedly proving our thesis, is that women are in many cases conduits to these new markets and drivers of these new business models. Example, 93% of women in Asia Pacific are looking to change their diet in the next 12 months. Women make 90% of household healthcare decisions, 93% of over-the-counter pharmaceutical purchases. Women more than men are more likely to seek health information online, even though telemedicine was for everyone. The same thing that we see through social commerce and all kinds of, whether it's content driven or influencer model commerce, which we believe is e-commerce 2.0 and 3.0. Women more likely to purchase through social circles, social media. They value community and content more than any paid placement. 90% of resellers on the top, some of the world's, or some of Asia's top social commerce platforms are women. And things like financial inclusion, right, where they were historically had less access, also means that they're more likely to actually, be open to, new forms of sort of, accessing these services. And I will share that more with our portfolio later, which is why we've chosen to focus on exactly those 3 things in the fund, which is the future of retail, financial inclusion, as well as what we call digital distribution, and health and wellness.
Thanks so much, Virgie, and thanks, Shane, as well. I think there's a pretty relevant question here in the Q&A, so I'm just going to pick that up instead of leaving it right to the end. And, before that, just quickly summarizing what we've said, which is that, certain trends have been accelerated by COVID. We've picked up some verticals like wellness, healthcare, financial services, omni-channel retail, and of course, fundamentally, we're looking at differences in how consumers build their brand loyalties and how we can best serve underserved consumer populations. And there's a question from Duncan McIntosh here, which reads, when investing in the digital economy, how should an investor think about the connectivity infrastructure on which it's built? And that very much relates to, how do we bring these services to the underserved consumers? So the rest of the question reads, the infrastructure decides how fast, how secure, and how much the digital economy costs to operate. So what can an investor do about bad infrastructure?
I'd be happy to take a shot at that one. No, good question. And I think what we do have in 2020 relative to previous phases for Southeast Asia is we have had substantial investment in the infrastructure side of tech. So, and we should thank our private equity brethren for this, and for a lot of strong strategics who've put in place good network connectivity across much of the region. Now, it's not perfect. Later on, I want to describe to you guys some of what HelloDoc is doing, where they're reaching out and trying to connect with areas in Indonesia that do not have the same quality of IT or telco infrastructure. However, I think a blended approach, if you're looking for the blended approach to both delivering upon better and better connectivity, as well as the right applications to deliver it at any point in time, I think it's a combination of VC as well as tech growth or TMT growth, of which there is still a lot of interest in this region in building out these things. It's amazing how many, how many data centers are building up, how much the sort of some of the telco equipment side of the business is starting to improve as well. While a lot of us on the VC side are focused on the application layer and making sure it's smart in the way in which it's managing the scalability on software infrastructure, I think there is good stuff happening on hardware as well, and that's very important. And it's also important that governments continue to make the efforts to lessen red tape and invite foreign investment where possible in those sorts of sectors.
Thanks, Shane. Virginia, did you want to comment on that question as well?
I think a few comments. I mean, as an investor, right? I mean, either you invest to upgrade some of that, infrastructure, or essentially, you have to, you invest in companies which have to play differently. They're not relying on that traditional infrastructure. So for example, in terms of sort of upgrading that infrastructure, a place that I see where technology can play a role. For example, in the last 2 years or so before that, I never saw companies like that coming out of Indonesia, for example. I've been seeing a lot of IoT for agri-tech, like literally so many deals on Internet of Things, for agriculture, whether it's chicken farms to shrimp farming to coconut plantations, etc. And I mean, before that, I had never seen stuff coming out like that. So I think that to me is sort of upgrading the infrastructure, right? Like the sort of the, yeah. I think in terms of sort of investing in companies which will play differently, I mean, there's a company we invested in recently. What they do is they do sort of refillable FMCG, right? So I mean, and refillable FMCG a lot of times is for mass market, or you say bottom of the pyramid, because they're the only people, or they're sort of the consumers. They don't buy FMCG the way we buy FMCG because they can't afford essentially to buy bottles of shampoo or detergent. So what they do is they buy little sachets of plastic sachets of stuff, which makes it much more expensive for them. So how do we change the way we get these things to them, right? How do we change the way we deliver these things to them? So I mean, what the company essentially is now doing is essentially setting up sort of mobile stations at warungs, etc. IoT powered devices, which don't actually require anybody to man. And I mean, yes, I mean that's not going to necessarily solve the logistics of getting all of that FMCG towards them in the first place, but it's essentially rethinking that the very basis of what we think is normal in terms of FMCG consumption, which is like a bottle of shampoo or a bottle of soap. Yeah.
Thanks so much for both those comments, and I hope, Duncan, that's answered your question. Otherwise, just let us know and we can pick it up later on. So we've now just talked about which sectors or verticals might be able to deliver both financial returns as well as material impact. And I think it makes sense for us now to dive a little deeper into understanding how exactly tech companies can create impact through their core business models. And maybe Virginia can start us off in this.
Sure. So I'll start off with one of our, one of my favorite portfolio companies. It's a company called Burgreens. They're Indonesia's leading plant-based food brand. When we first invested in them, they were simply an F&B, but part of our sort of investment was actually so that we could work with the company to transform them into a CPG company, because what I had noticed was that the founders were particularly talented in terms of food innovation and actually production. I mean, what I've seen from them in the last 6 months has been pretty incredible. I mean, they launched the direct-to-consumer platform and product during COVID-19. They will end the year EBITDA positive. Sales and increase in online sales, 200%, during COVID-19 alone, and their revenue is already back to pre-COVID levels essentially. I think apart from the world's sort of craze on food tech in general, I think, you know, the one reason why I like this company a lot was, and a lot of these companies that we look at is because, you know, impact to me, you know, it's like what Shane says, right? It's not ancillary, you know, it actually goes to the heart. It goes to the heart of actually what some of these companies are doing. I mean, to me, technology is an instrument, right? So in this case, you have the food tech itself, right? You know, a new way of building food. What I love about them is that they're cheaper. That they're much cheaper than what Beyond Meat would sell their produce for, and taste is excellent, tailored to our sort of our palate. But what I've loved, you know, is how they've actually managed to during COVID-19. So you know, is basically been able to launch, you know, that direct to consumer product, and therefore, you know, using the technology platform, you know, to not only just build their brand, but also, you know, essentially, you know, to bypass a lot of the disruptions of COVID-19. So you know, you know, that's an example, apart from, you know, the general trend towards healthy eating and ensuring people actually eat healthily. Next slide, please. This is another of our portfolio companies. Again, you know, focusing on what I think Shane and I talked just now about, you know, the digitalization of SMEs, you know, SME transformation, which was already underway. But I think, you know, you can either, you know, like you say, do two things: try to upgrade, you know, traditional sort of, you know, merchants, or essentially build sort of infrastructure to sort of serve them. And this is exactly that. I mean, what I love about Click, I think, is, you know, they're one-stop shop for mom and pop merchants. But it's not just, I think, you know, how they've managed to sort of, you know, scale sort of, you know, e-commerce, mom and pop merchants by group buying, but it's also layering on top of that inventory management systems, digital ledgers, so that, you know, essentially some of these products are completely free right now. So essentially, you are giving, you know, lower prices, therefore higher profit margins for merchants. But at the same time, also, you know, providing them with this infrastructure, which will allow them to actually run their businesses actually more efficiently. And they've grown like 20 times, you know, since the beginning of 2019. And during COVID, you know, with very little increased burn, you know, continue to grow very, very steadily. And again, you know, like I said, this is not, you know, an Impact Plus, you know, for them, you know, digitalizing the whole SME, you know, digital supply chain actually is at the very heart of it. What surprised me when I first looked at this company, because I did not expect that, you know, essentially is that, you know, the majority of people actually using their app to procure digitally were actually women. They were sort of the female owners of mom and pop stores, because they were the ones in charge of inventory, you know, and finance. The same way that when I looked at Burgreens, healthy food is for everyone. But again, the majority of consumers were women, because they were first adopters of healthy eating, you know, for themselves and for their households. Next slide, please. And I think, you know, and finally, you know, the sort of the last portfolio company I wanted to share, you know, is Duit Ape, leading player for digital aid distribution in Indonesia. You know, and for them, I think, you know, we invested in them not knowing that COVID would actually ever come. Quite frankly, you know, what we really saw them, they're focusing on digital aid distribution using facial recognition without the use of smartphones. Essentially, they distribute aid. And then if you are an aid beneficiary, you can go to one of the network of their 3,000 or so growing sort of small merchants, and you can redeem sort of cashlessly, right? Because, you know, the poor, you know, they don't have smartphones. You know, so that was one thing. But actually, you know, why we like this company is because we saw aid as actually as sort of a cost-efficient way, you know, to sort of acquire the unbanked. Because, you know, the unbanked, you know, in general, you know, they're not necessarily going to use the same, you know, general platforms or goods and services that we do. And therefore, for a long time, we're essentially ignored, right? Because, you know, you think the unbanked have a low LTV, you know, in the long term. And again, you know, like I said, what we also noticed again, you know, is that, you know, by leveraging this technology, you know, that would not only create, you know, 20% sort of cost savings for the people who are actually distributing aid. And Indonesia, you know, historically has a much higher sort of aid distribution, amounts of aid distribution than other countries. It's a historical and political thing. You know, government aid alone is more than 8 billion, just that one vertical. And you know, apart from cost savings, right, you could also be able to control what people were spending on, and you know, and make that whole process a lot more accountable. And again, Duit Ape actually, I actually hadn't really realized that until recently. Duit Ape actually prioritized female beneficiaries, because they realized through their data that when you distributed aid to female beneficiaries, you know, a lot more of those proceeds were spent on and, you know, at the shops, you know, buying things which were actually going towards the family. So again, you know, it's sort of the technology actually leads to that outcome. It's a sort of a embedded sort of gender lens. Yeah. And finally, I just wanted to spend just 1 or 2 minutes just showing the way we think about impact and gender, because for us, building Teja, had so much to do with that experience of managing 100,000 over young women sort of consumers, understanding their needs and actually understanding their consumer behavior. When our gender lens sort of methodology sort of runs through our entire process, everything from the sourcing to the investments, to the post-investment. I mean, apart from the focus verticals that we like, which are health and wellness, digital distribution / future of retail, and financial inclusion. These are some of the questions that we ask ourselves. These are the gender lenses that we apply. If they're for women consumers, are they solely or disproportionately designed for women as end users, or is it accidental? Does the business model or technology directly or indirectly impact women in the ecosystem positively? And very often, because when we look at a lot of these mobile workforces, especially for rural commerce, etc., we actually realize a lot of them driven by women as a workforce. And I think the aim of our investments is always apart from looking at sort of the most scalable business models, we're always looking for ways to put more income, work opportunities, and better consumer options in the hands of women, because we believe that creates that virtuous cycle of consumption and growth, and also a cheaper acquisition cost for a lot of our portfolio companies, especially if they are serving unmet needs. Because you have less access, to begin with, you're more likely to be converted. And finally, I think our final slide. I mean, I think this is a long slide, but the only two things I think to really look at are, if you look at what we're seeking to do as a fund, you want to create economic value for both investors and women. You're looking at women as market makers, which is what I said, our thesis was at the beginning. But I think at the very same time, while these technology companies are enabling women or we're investing in women as market makers, at the same time, these women are actually conduits for social change. It's not an additional, it is at the same time. And I think, it took us actually a while to realize that, in the beginning, we were focusing completely on the commercial drivers, only realizing then that women were actually conduits to these, not only new markets, but at the same time, changing sort of consumer patterns. Some of these consumer patterns we need to change, in a post-COVID world. And when you look at the top about creating economic value for both investors and women, I believe the main driver for that economic value is technology. Because you allow to scale women as market makers, which is your financial returns, and you allow women to scale them as agents for social change, as conduits. So yeah, I mean, that's why I think we enjoy doing what we do.
Thanks so much, Virginia. I think what was really interesting about the companies that you shared, Alternative Proteins, a supply chain platform, digital aid distribution, these are not, I think, companies that people would expect immediately when they're talking about a portfolio of a gender lens fund. And that really goes to show how diverse these opportunities are. Now let's move over to Shane, who can bring us through a couple of OSV's companies that are tech-enabled and that also enable impact.
Yeah, thanks, Jack. And thanks, Virginia. Some interesting companies. Let's talk later. I've got a few ideas for you. But I'll just give you an overview of some of the companies that we're very proud of. So we've got 30 portfolio companies. In a longer session, I'd love to walk you through many of these stories, but here's just a snapshot, I guess, that gives you a sense of the diversity, the emerging scale, and the way in which we're impacting people's lives. Okay, so Halodoc has been mentioned already. I think you're going to hear a lot more about this company. It's Indonesia's leading mobile healthcare platform by a comfortable distance when it comes to transactions and key metrics. Over 17 million monthly active users, and it's had a huge tailwind during the COVID period because it was right there offering the sort of surface people were looking for. It's also one of the most ambitious health tech startups globally. Why do I say that? Because the breadth of the product that they've brought together is usually done in a piecemeal fashion in other markets. So they offer telemedicine, so a great way to get a consultation. There's an e-prescription type opportunity that's passed off to an e-pharmacy where you can get the pharmaceutical products delivered. And all that's brought together with a payment layer that includes our portfolio company Gojek's GoPay as one of its primary sources, but also integrates with insurance providers And over time, that will integrate with BJPS for rebates on the national health system. And it's already integrating with a bunch of different insurance companies. So imagine a health timeline that you can see when you consult, you can see when you're getting pharma measured, you can make doctor appointments, you can do doctor referrals, and it all gets wrapped together with a payment layer. It's been really interesting to be part of the execution. Great job by the team. And we've managed to get to a point now where we're making some serious progress in terms of tapping the market opportunity. And we've created that sort of brand and that sense of trust that was important during the COVID period. And we have a way to monetize, which is to serve the Jakartaites and a lot of people on Java, and they're prepared to pay. And so we can build a profitable business. At the same time, we know there's incredible value in servicing the broader community, including doing some of this pro bono, doing this because we can. And so we mentioned there on the slide, 20% of our patient base at the moment is outside Java. And then if we go to the next page quickly, you can see some of the ways in which we can use this access to patients, this technology platform, using data, and also using the support of our investors. So we have a co-investor in HelloDoc, which is the Gates Foundation. And Gates Foundation has been supporting us on this initiative to power up the midwives. And midwives are operating in different environments, different situations all over Indonesia. You might be in a good hospital, but more frequently, you actually don't have access to doctor or specialists. You may not have the right equipment. Let's use HelloDoc to enable midwives all over Indonesia to dial back into doctors, and then Gates Foundation is going to give them certain diagnostic equipment and certain equipment to help with, for example, oxygen levels in the blood to address potential pneumonia risks, which is actually a big way in which child mortality is unacceptably high in parts of Indonesia. So this is just one example. There's many examples I'd love to tell, but it's a fascinating way in which we're, again, leapfrogging what is a underinvested health infrastructure using technology. Second example I want to give is Tani Group. So my friends in the picture here behind me. I think this is really fascinating opportunity to simplify a very complex supply chain that isn't delivering for anyone in particular. And what Tani Group does is it connects the farmers to multiple end sources of demand. And in between the farmers and the end source of demand, it helps to manage demand supply matching, it helps to manage logistics, and it has a financing wing as well. And if you're able to do those things, it means less waste, it means better prices, it means more efficient in terms of time, it means a more secure food supply chain. And so we're just getting started. We've got 30,000 farmers empowered. We've had substantial increase in those farmers' income. We're starting to lend to them, but it all makes sense financially as well, because once we know, what a farmer is good at, once we know what the demand profile looks like, we can then lend back to them and get them to invest in the unit costs of production and invest in some environmental factors, which are very important. So can we give them the right access to fertilizer? Can we give them the right access to seeds? Can they bring more casual labor involved? Can they invest in better water resources? And for those of you based in Singapore, can they burn less trees to make sure that the agriculture is more sustainable and causes less pollution? So it's exciting to be in the middle of this. The company is also profitable, and it's grown about 4 times during COVID, which makes my more financially driven LPs very happy. And one last example, which is out of Singapore, and this is more on the environmental management side or power management side. And I think there's definitely a big role for R&D centric place like Singapore to generate great ideas using things like Internet of Things, using strong software to actually, deliver upon some important social goals as well and environmental goals. And so SensorFlow is a more recent investment of ours out of Fund 2. We're helping to address the massive energy wastage that occurs through bad use of air conditioning. And so if you're in your staycation and you leave your door open and the aircon turns off, that's probably a SensorFlow device, which is helping make that happen. And that can actually save a lot of energy. It helps the hotels make money. It helps retailers and offices and others be more efficient. And ultimately, it's very good for environmental impact as well. So I'll leave it there. And Jack, I don't know, you're going to go on to some questions.
Yeah, that's right. So thanks so much, Shane and Virginia, for giving us some clarity on what exactly investing in tech for impact means. Right now, we just have a quick poll that we'd like you to fill out, and we're going to keep this poll running as we move on to the Q&A. So if you could just close the poll window whenever you're done filling that out, that would be great. we don't have a lot of time left. We've got 8 minutes. So what I've done is basically merged 2 of the questions that we've received, and I think we can take both together. So this is a question by Todd Wessel. I hope I'm pronouncing that right. And the question is, while Southeast Asia is a large market, parts of it are either small countries with limited purchasing power or isolated areas with high costs of transportation and logistics. Are you looking at cross-country investments, large single-country markets, or are you able to find solid investments even in smaller markets? I thought this was a really good question, really spoke to the topic. And if I could just ask our speakers when they respond to think about I guess how to answer this in a way that also addresses the question of the sectors that are rewarding from both an impact perspective as well as a financial returns perspective. Thanks.
So, yeah, Jen, if you could bring up the team page, please, as I'm speaking. You know, from Open Space perspective, we're believers in the region as a whole. We believe it's been underinvested. We believe it's got incredible nascent opportunity. And relative to a lot of other investors, we're also bullish on the idea that you can go from one country, and with the right support and the right infrastructure, you can actually grow into multiple countries in the region. And the question is not normally if, but when, okay? But that when question is an important one. You need to make sure you have the management bandwidth. You need to make sure you have the technology core, and you need to be supported by good investors if you're going to make the transition from one market to multi-markets. And so I asked Jen to bring up this slide because you can see the way in which we address the Southeast Asia opportunity is through a very diverse team. We have another version of this that doesn't show their logos, but shows their flags. And so we've got a team based in Bangkok, a team in Jakarta, personnel based in Vietnam and also Philippines. And so when we're looking at situations, we want to help to understand when is the right time for us to go from one market to another market to another market. But we do believe there's great opportunities to go regional. And if it's not the right time to go regional, there may be ways in which we can seed companies that are going to focus on different domestic markets and then cooperate. So we just announced as part of Fund 3, we just announced an investment in Freshket, which is got some similarities to TaniHub, but it's for the Thai market. And they're finding ways to cooperate on export import, on experience sharing and other stuff like that. So I think that's an important part of it. On the question, which is around smaller markets, you know, as a financially driven investor trying to, you know, or incorporating impact into everything we do, we're aware there are markets that, you know, are probably subscale for financial returns at the moment, but still have important development needs. It may not be the primary place in which we invest. However, we do look for ways in which our portfolio companies can grow into places like Cambodia, Laos, Myanmar, and other ones.
Thank you, Shane. I mean, for Teja Ventures, I mean, this is our debut fund, so we are, you know, pretty focused on Southeast Asia. I would say in Southeast Asia, Indonesia is our key market, but we have been looking at opportunities in Philippines, in Thailand, and in Myanmar. I think right now we will still focus, I think, on single markets, but I think what's quite interesting about our team, actually, you know, which I showed, you know, previously, was that half of our team's partners actually are in China, and the other half actually in Southeast Asia. So, you know, we have a little bit of exposure to China in our fund, and what we're actually seeing very interestingly is actually quite a lot of cross-selling sort of opportunities, not just opportunities to just collaborate, but to actually sell each other's products, you know, because they, like I said, we've invested in a whole bunch of distribution sort of systems, technology-driven distribution systems in both markets. But I think for the foreseeable future, you know, given that this is our first fund, we will probably still heavily focus on Indonesia. Myanmar is a market which particularly excites me, just because I do see some similarities with Indonesia, but, you know, I would say 10 years, 10, 15 years before. But I think, you know, for us, I think focus is probably, you know, the right thing for now.
Thanks, Virginia, and thanks, Shane. So we have a couple of minutes, and I was wondering if maybe each of the panelists would like to give a quick closing statement, just with the takeaways that you would want our audience to leave with. Maybe if Shane, did you want to start?
Yeah, well, first thing to say is perhaps we didn't allow enough time. I saw some very good questions coming through on the channel, and if anyone wants to contact me later for my view, my contact details can be, you know, that way, the QR code on this side. So I think this is a sign, the fact that the attendance is good, the vibrancy is good. This is why we're excited to engage more with the impact side of investing, and to really work together with people like Virginia in sort of bringing these two lenses together, two perspectives together. Financial returns is consistent with impact, impact is consistent with financial returns. The biggest problems to be solved are there to be solved by great venture investors, great entrepreneurs, and a supportive ecosystem. So I think this is a sign that we want to continue to double down. We think that post-COVID, the opportunity is right there for us to address, but you got to stay active, vibrant, and we need the support of everyone in the ecosystem, LPs, other GPs, talent that wants to work in tech and wants to make a difference.
Thank you, Shane. I think for me, what I see very, very encouraging after COVID is that I think investors in particular, and I think people in general, actually have a much more open view of ESG and impact than before. I think previously, what was seen as nice to have or termed socially good has now become increasingly essential and urgent. I think COVID has shown us the cracks in the way we're currently doing things. And I think more people are actually willing to be open to different ways of doing things. And I think, as Shane said, as investors, we do, I think we do have to lead the way, by looking at commercially scalable business models, which have impact embedded in the heart of it, not just ancillary, not just like a tick the box. And actually what I'm starting to realize is that actually the very things which are underserved, so the very things which cause a company or technology company to have impact might be actually the very things which make it, strategically more advantageous. It may actually give them a strategic advantage if they serve that need well, or in a way that others have not done before, or in a cheaper way. And actually, I think the final thing I wanted to say is that, I think, Jack, you made a really good comment. You're like, oh, I didn't think these were gender lens type investments. I think, I think the way people have seen gender or women actually is not as nuanced as it actually is. I think gender and impact, specifically, since that's what Teja really cares about, it is nuanced. I think for a long time, people were just happy to tick the box, right? Is this a woman CEO? Is this a woman co-founder? Okay, are there some women in the team? Okay, that's fine. But I think increasingly what Teja hopes to use technology to do is whether what positive impact can we create for 1 million female consumers, a million housewives, 1 million resellers, yeah, exactly, or sort of 1 million contingent workers. And I think that's what I'm going to continue to double down on, and actually that secondary sort of impact that you get once you empower all of these people, because they are, again, conduits to their households, they're conduits to their communities, they're conduits to people as a whole changing their consumption behavior. So I think that's what motivates me. And I've loved some of the questions from the audience today. It's a pity we cannot actually answer more of them.
Clearly, guys, everybody's interested in hearing more. Thank you, Virginia, Shane, and Jacqueline, for the excellent webinar. We never have enough time to answer all the questions, but thank you for the audience for really getting engaged and asking all these insightful questions. It's incredibly inspiring to see how investing in technology cuts across so many different social sectors and catalyzes impact. Thank you, as I said, to all the audience for your active participation and the engaging questions. As previously mentioned, this event is part of the family office offerings provided by AVPN. The next family office event is with IMP, as they share about their recent work integrating financial and impact management methodologies through Impact Frontiers collaboration and their recently published investor handbook. We will send an invite to our family offices for this event on the 2nd of October. In addition, we have an event in partnership with GIN R3 Coalition on the 14th of October, showcasing social entrepreneurs, raising investment capital, and addressing issues that have arisen due to COVID. You can find out more information about these events on our website in due course. Again, the Shane and Virginia's email addresses are there. The QR code is there, so please feel free to reach out to them directly for any questions that are still outstanding and you want answered. Thank you again, everyone, for joining us for this AVPN Impact Fund webinar, and we hope to see you online soon. Bye-bye.